Hello, everyone, and welcome to ARPA, the Final Rule Compliance and Reporting. I'm Katie Buckley, and I'm the director of the ARPA Assistance and Coordination Program for Vermont League of Cities and Towns. And I am joined today by an awesome team of VLCT women. My co-presenter is none other than the municipal finance guru, Sarah Macey. Sarah is VLCT's new government finance specialist. We are looking forward to sharing with you what we have learned about ARPA funding since the issuance of the final rule. Also with us today is Lisa Goodell, who has a new role at the League. She will be our new digital marketing specialist. So she is joined by Shayna Lyon, who will be filling Lisa's very big shoes as our new event and partnership coordinator. Please welcome her. She just joined this week, and I told her that it's very good luck to start right out of the gate with webinars on your first week. So we're glad to have you on board, and thanks for the help today. So we're glad that you're here with us. And thank you for making the time. So let's dive in. I'm going to start by screen sharing. We have a slide deck. And maybe Sarah, if you could give me a thumbs up because I can see you and let me know. Awesome. So you can see my screen there. Very good. So here's what we will cover today. We are going to go over the final rule changes, spending, the standard allowance, NEU, reporting the portal setup and the project and expenditure report, accounting considerations with examples, and we'll have time for a robust Q&A at the end. I just want to do a little bit of housekeeping. This session is being recorded and it will be posted on our website along with this slide deck once everything is ready. The deck has many hidden treasures in it. So anywhere you see a bolded underlined blue text, there's a link to another document, resource, or website. As we work through our presentation, please know that there will be ample time at the end for questions. If you have questions along the way, please post them in the Q&A section and keep them general for everyone's benefit. Any super specific questions, we're going to ask that you email us directly after the presentation and we'll answer you there. So if you could monitor the Q&A, and if you see a question you like, give it a thumbs up. Questions with more thumbs will get answered first. If you have, oh, I already said that. Specific questions we'll answer directly through our contacts. So the final rule. Let's start with a little ARPA refresher. The American Rescue Plan Act was signed into law a little over 1 year ago. Of the many things, it created the State and Local Fiscal Recovery Fund, and we simply call that ARPA because State and Local Fiscal Recovery Fund is a mouthful. Its purpose, ARPA's purpose, is to help governments respond to and recover from the pandemic. And ARPA is implemented by the final rule, which was just issued January 6th, and it replaces the interim final rule, which had been in effect since May 17th of last year. In total, Vermont will receive $1.25 billion of ARPA funding. A little over $200 million is local ARPA money, that are half of which is in your bank accounts right now. It went out to towns, cities, and villages, which is just about $300 per Vermonter, and a little over $1 billion will run through the state of Vermont. So the final rule. The final rule is in effect now. It took effect April 1st. It contains many sweeping changes from its predecessor, the interim, which are beneficial to Vermont's towns, cities, and villages. Legislative bodies are the deciders for ARPA. There's no approval process. There's no higher power. The legislative body in your community is the one who ultimately decides how these funds are spent. The award relationship is between Treasury and the municipality. The state of Vermont has no oversight on your local ARPA award. It is merely a financial intermediary for Treasury. Basically, it's the vehicle by which Treasury gets its money to you. All towns excluding Burlington, I know there's one person from Burlington with us today. All towns have an annual reporting requirement, and the period closes March 31st. And the period reporting is due by April 30th, starting this year, this month, 2022, and ending in 2027. So the final rule is very clear about the types of things that ARPA funds cannot be spent on. So you can't spend it on extraordinary deposits into pension funds, contributions to rainy day funds, reserve funds, or satisfaction of a settlement or judgment, or outstanding debt service. And please note the word directly fund, because that is how it's worded in the final rule. One of the changes that did come about, moving from the don't to the do list in the final rule, was using your ARPA award to serve as non-federal match. This was not allowed under the interim final rule, and it is now. This means that towns, cities, and villages are potentially sitting on tens or even hundreds of thousands of dollars of potential required grant match for other forthcoming additional federal funds like infrastructure money, as well as other existing grant programs. So if your town struggled to come up with a 10%, 20%, or even 50% required match for a grant program in the past, your ARPA funds can now help you cross this hurdle. So what can you spend the money on? Well, basically the same general categories as you could with the interim final rule, but now they're broken out into 83 expenditure categories instead of 66. Just with a little more specificity there in terms of guiding you on how you can and can't spend the funds. For rural communities, small towns like we have here in Vermont, most of the categories are either not applicable or just too restrictive and don't actually allow the funding to be spent to meet each community's unique and actual needs. However, there is one category, number 6, revenue replacement, which gives towns broad latitude in how they can spend their funds up to the amount of their revenue loss. We've been talking with everyone for months about determining the amount of revenue loss in your town, since it provides the broadest flexibility in terms of spending ARPA funds. We even created a revenue loss calculator to help make it easier to work through this formula. But even then, many towns were unable to show a loss. And I just want to take a little minute to say, by the way, Sarah Macey, the one and only, she's the one who created this calculator for us. I have to give credits to Sarah here. We were grateful to work with her on that. And the very best thing that came out of the calculator for VLCT was Sarah joining our team. So just wanted to plug her there for that calculator, but let's get back to the formula. So with the final rule, there's a second option instead of using this clunky formula. And it is the $10 million standard allowance. You probably have heard us talking all about this lately. It's in all of our materials and all over our website. And I've talked with many, many, many of you about it, both phone, email, and in presentations. Every ARPA recipient with an award less than $10 million can take the full amount of their award as lost revenue. And please note, it doesn't change the amount of your award. 10 million is the cap for the standard allowance. So think of it that way. Doesn't change your award. And should you take it? Yes, you should, and we'll explain why. So what does it actually mean? Municipalities may now spend their ARPA awards on the provision of government services. And as we have talked about before, it is the broadest brushstroke that you have in terms of your spending. Any service typically provided by a government, that's provision of government services. Even if your town has not provided the service before, that's okay. It's still a government service and you can spend your money on that. This can range from bolstering town operations like IT upgrades, cybersecurity, digitizing land records, to improving community gathering places, supporting local nonprofits, buying equipment for firefighters, highway crews, roads, bridges. The list could go on and on and on. And so here at VLCT, Sarah and I, we have our 3 basic rules of ARPA spending. If it's illegal to spend your taxpayers' money on it, don't spend your ARPA money on it. If it presents a conflict or even the appearance of a conflict, don't spend your ARPA money on it. If it isn't something that you wouldn't ask your taxpayers to consider funding, don't spend your ARPA money on it. Whoop, I just want to go back. I didn't cover the best part of this slide. You don't have to document, calculate, demonstrate, any of that. Treasury presumes you have the loss. So that is, that's key right there. So you don't have to worry about that. Even if you didn't have $1 of revenue loss, Treasury is going to presume that you did. So you are free and clear to take the standard allowance. Here's the caveat. You must elect to take the standard allowance in your reporting that is due by the end of the month. It is a one-time only thing, one-time irrevocable election. That's where those words come into play. We have poked and prodded. We've asked industry experts to weigh in. We've read all of the guidance, and we can't find a downside to taking the standard allowance. There's only upsides. So, you know, we scratched our heads, and many of you are saying, no way, this is too good to be true. And we've said the same, but from everything that we've researched and explored, this is exactly what Treasury wants you to do. And if you've watched any of their webinars, this is exactly what they tell you to do. So after weighing your options, if you decide to take the standard allowance and it's the right approach for your town, and we don't see why it wouldn't be, do it now, because you only have one chance. So you'll hear us say over and over through this presentation, do it now. So I'm going to talk generally about reporting in the next few slides. If you want a deeper dive, I suggest you visit our compliance and reporting page off our ARPA webpage on our website. We've broken things out so it's a little bit more user-friendly for you all to use. And down in the small print there in the lower category is in the lower left corner, sorry, is the link to that on our website. It has the user guides, webinars. I strongly suggest you take the time to comb through some of that. So before you can do any reporting, you must first set up your town and treasuries portal. The NEU user guide will take you through the first 13 steps. That's the first link there, NEU user guide. If you hover over that, that's a link. And it's only 13 pages. It's not a big lift. It's pretty easy to read, and it does a good job of stepping you through the process. If you haven't done that already, I suggest you read it first before you do anything else. You'll need to create a login.gov account. For a while there, Treasury was saying that everybody needed an ID.me account. If you did not create an ID.me account, do not create an ID.me account. Create a login.gov. It's a much lower bar, easier, less invasive in terms of providing your personal information. The first person who has to go into the portal is your account administrator. And this is the person who is named as the authorized representative when you certified to receive your ARPA funding last summer through the state of Vermont. So this person was automatically named the account administrator by default in Treasury's portal. So this person has to go in. They will designate and assign the roles to other officials in the portal. A single person can have multiple roles, and a single role can have multiple people assigned to it. And it's recommended that you have more than one person assigned to each role, just in case one of you wins the lottery and moves to a tropical island. You have a backup plan without having to contact that person, because they might not have internet on the tropical island. So, okay, I think I covered everything there. Oh, and don't forget to hit complete. Hit the complete button or it won't save. So a little bit more about getting set up. In addition to setting up and designating and assigning roles, you'll need to upload 3 documents in the portal: your award terms and conditions, your assurances of compliance with civil rights requirements, and your budget document that supports the number that you submitted during the certification process last summer. We have, just in case you can't find your signed copies from last summer, you can print new ones and sign them again and date them again. The date of the award is the date that you certified for your funding through the state of Vermont. And the copy of your budget docs, whatever number you submitted there, if you can print might be a approved budget that shows that number. It might be a report that you print. If you're in Nemrick Town, it might be something that you print from there, but some sort of document that shows the budget that was in effect as of January 27th, 2020. If you can't remember the date you certified, or you can't remember what the number was that you entered for your top line budget, I have a copy of the spreadsheet of all the information that was entered during the certification process, and so does your ARPA lead at your regional planning commission, so you can reach out to either me or them, and we can help you with that. So NEU reporting for the project and expenditure report. This is an actual screenshot from the portal. I grabbed it from the guidance document. And so, as we've said, take the standard allowance. It's the fastest, easiest, simplest approach with the most flexibility for you in terms of spending. So you'll do it this reporting period. You'll enter some information in a few boxes that you can see there. That white part at the bottom, you'll enter an explanation in there. If you spent money already, you'll put a brief description in there and the amount that you've spent. If you haven't spent any yet, indicate in that box saying, haven't spent any funding yet. And you can do all that in 3 easy steps. So what are the biggest takeaways from the slides thus far? If you haven't set your town up in the portal yet, don't wait, do it now. Whoever was named as the authorized representative during the certification process is the account administrator, and that person has to go in the portal first before anyone else can do anything in there. Create a login.gov user account for yourself if you don't already have one. You must complete the project and expenditure report, regardless of whether you've spent any money or not. And take the standard allowance. It's easy, 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 and there's really no downside to the approach. And last but not least for my section, bookmark these 3 pages. Any information that we get, any updates, any questions that we receive frequently, we'll post in the FAQs, and we keep this information fresh. It's designed for your benefit, so don't be shy. Bookmark those and visit them if you have questions. And if you can't answer them, you can always reach out to me. And now I'm going to pass the torch to Sarah.
Awesome. Thank you so much, Katie.
Okay, and you're going to tell me when to advance the slides since I'm driving.
I will do that.
Awesome. Thanks.
All right. And if I'm talking too much, just advance them and I'll get the hint. So good afternoon, everybody. As Katie said earlier, I'm Sarah Macey. I'm recently joined the league, and I'm very excited to be here on my first webinar with the league, talking about my favorite topic on the planet, which is governmental accounting, and in particular, the intersection between governmental accounting and ARPA funds, which I am sure is a hot topic on everyone's mind these days. First up, I want to reiterate from what Katie's, what?
Sorry, I advanced.
Was I going too long already?
No.
It's all good. I want to just reiterate really quickly before we get going that taking the standard allowance and spending your funds under Category 6 revenue replacement, it creates the most amount of flexibility. It dramatically simplifies your reporting requirements, and it really eases your overall administrative burden associated with your ARPA funds. There's no reason not to. Even if you want to do a project that is clearly defined in one of the other expenditure categories, you can still do that under revenue replacement and take advantage of the simplified reporting and the lesser administrative burden that comes with reporting under revenue category number 6. I'm ready for the next slide. Thanks. Okay. So with all that flexibility we've been talking about, we still need to ensure that we're accounting for the funds appropriately and in a way that's going to allow us to track and report on this activity over multiple years, since the performance period goes all the way through the end of December 2026, with our final report due April 30th, 2027, which still doesn't feel like a real year, but it's coming up quicker than any of us would like to believe, I'm sure. So if you haven't done so already, I recommend accounting for your ARPA funds in a special revenue fund. The definition of a special revenue fund is a fund used to account for and report the proceeds of specific revenue sources that are restricted or committed to expenditure for specified purposes other than debt and capital projects. ARPA funding then is a clear candidate for this type of fund, and given its broad flexibility and that multi-year performance period that we're talking about, having a separate fund for those monies is going to help segregate ARPA activities from everything else and just ensure that you have the meticulous, transparent paper trail that you're going to need along the way. This money can be expensed directly into the Special Revenue Fund or the SRF, or it can be transferred to other funds and spent there. For example, if you're going to do a water and sewer project out of one of your water and sewer enterprise funds, you can use that SRF, the Special Revenue Fund, as a launch pad and then transfer the money out into the special. Sorry, the chat. Hi, Wendy. Thank you. Yes, NEMRC has a great how to set up a special revenue fund in NEMRC resource that went out. And if you haven't already done that and you're a NEMRC user, I would also recommend taking a look at that. Depending on your basis of accounting, you may not be booking it directly into a revenue account. You might be putting on a liability account. We'll talk about that next. But there are some resources out there. We're going to talk about, actually, that's a great transition into the next few slides. I'm going to talk about some, before we go, okay, that's fine. No. We'll talk about some generic examples. And they're really pretty basic. In fact, example 2 has 2 different approaches. As you can imagine, they're there are a number of ways to spend your ARPA money. In fact, I would be willing to say there are as many ways to spend your ARPA money as there are, recipients of ARPA money, because of that broad flexibility under revenue replacement. And then there's not always a specific required way to do the accounting, but a couple of different ways to account for any one type of transaction. So we're going to take some questions at the end. If you have really specific what if questions that come up during the webinar that are really specific to what you want to do in your entity, and you want to brainstorm how to account for those things in your books, please feel free to give us a call. We'd be happy to discuss that with anybody. And once we get to the end, we'll share our contact information. Okay, Katie, I'm ready for example number 1.
Awesome. Here we go.
Okay. So just a quick note here before we jump in. In these examples, I am assuming that you're using GASB and GAAP basis accounting, which is modified accrual accounting for governmental funds and full accrual accounting for your proprietary or enterprise funds. For anyone on the call right now using cash basis accounting, the entries will be different. Don't worry, I'd be happy to chat with you one-on-one if you're interested, but we are not going to talk about cash basis accounting today. We're just going to stick with GAAP basis accounting for governments, which is modified accrual for your governmental funds. And your general fund, your special revenue fund, those are both going to be governmental funds. So scenario 1, you have all experienced this scenario. You received your ARPA money. You received the first payment, and maybe you haven't spent anything yet as of the end of the year, regardless of whether or not you've spent money. When you receive those funds, you would debit cash, and you're going to credit a liability account called unearned revenue or unearned grant revenue. If you're using a special revenue fund, that entry is going to happen in the special revenue fund. If you have pooled cash in your general fund, the due to, due froms between the funds will come into play, as you are not required to set up a separate cash account for your ARPA money, though you are allowed to if you wish to do so. Since ARPA funds are subject to eligibility requirements, in this case, incurring eligible expenses, that's what makes them unearned revenue and a liability at this point until they are spent. So if you haven't spent anything in your first year, this is it. This journal entry when you received your funds, and your books are going to close with a asset for the amount of your award and an offsetting liability. That's what will end up on your financial statements. All right, Katie, let's go to example 2. So example 2 sounds pretty simple. So you have your ARPA money and you've decided you want to use $100,000 to pay for police salaries. This is not a new initiative. This is clearly the provision of government services. This is something your government has already been doing. We can assume that those police salaries are budgeted for and paid out of the general fund. This falls under category 6. It seems pretty simple, right? Now, this is called example 2A because there are multiple ways that you could account for this, and there are pros and cons to each of them. What we're seeing here in example 2A is that first, we need to recognize the revenue. So remember, we parked that revenue on the balance sheet as unearned because we had yet to meet the eligibility requirements, which was incurring eligible expenditures. Now we're going to use some of those funds, $100,000 to be exact, to pay for police salaries, which is an eligible expenditure because it's the provision of government services. Sorry to be a little bit repetitive, but some of these things come up over and over again. And with such broad flexibility, sometimes even I have to sit back and think, do they really mean we can do that? And the answer is generally yes, we can. So in this scenario, we're paying for salaries. First, recognize revenue, as I said, that happens right in the special revenue fund where you have that money parked. In this example, we're going to transfer those monies over into the general fund where we're normally processing police payroll. Now, why would we do that? We have police salaries budgeted in the general fund. We have trend analysis in the general fund when we look year over year for comparative purposes. When we're working on our general fund budget, for example, we're often going back and saying, what does next year's budgeted salaries line item look like compared to this year, last year, the year before, budget versus actual. These are ongoing expenses, and there's something to be said for keeping them in their, I don't want to say proper place, because you could move them, and we'll see that in example 2B, but keeping them where they have been and where they will continue to be over time. One of the things that we look for in financial statement analysis is comparability year over year. And if we were to move those expenditures, you might get a little bit of a dip in your general fund. So in this example, recognize revenue in this special revenue fund. We're going to then transfer that over from the special revenue fund into the general fund. And then we're just going to process payroll as we normally would, having those police salaries, expenditures hit the general fund and reducing general fund cash. Next slide, please, Katie. Okay, example 2B, we're still on this same concept where we're going to use $100,000 to pay for police salaries. This time, we're still going to recognize revenue because we've incurred the eligible expenditures. We've met the eligibility requirements to recognize that unearned grant revenue as grant revenue. We're still going to do that right there in the special revenue fund. But this time, instead of transferring those monies then over to the general fund, which creates an extra step and a little bit longer of an audit trail you have to follow to figure out what you did with those monies, we're going to reclassify the associated police salaries out of the general fund and book them directly into the special revenue fund. Now, I think the obvious downside to this example is exactly what I was talking about in 2A, which is now you're going to have a little bit of a blip in your general fund police salaries line because this year you've moved some of that into the special revenue fund. You can easily explain that in a budget to actual and a year-to-year comparison, but it's possible that you might not want to do that. The obvious upside to this scenario, though, is traceability. You now know all within your special revenue fund exactly what you're spending your ARPA money on. And as those years go by, except 2027, we are going to have one place where we can look back and we can see the history of what we did with ARPA monies, and we can tick and tie what we actually did with our reporting requirements. Now, either of these ways is correct, and it really is going to depend somewhat on your personal preference and past practice on how maybe you've handled things like this in the past, or what sort of precedent you want to set for future versions of yourself. I like to ask myself, is future Sarah going to understand this? Because personally terrible at taking notes about what I've done and why. So those are some considerations you might want to have as you're deciding how you would use funds in a scenario such as this. All right, Katie, on to our last example for today. So example number 3 that I have for us to talk about today is using ARPA money to purchase PPE. This is, again, an eligible expense. And in this example, we're going to spend this directly out of the special revenue fund. Once again, we've met our eligibility requirements. We're going to recognize that revenue by moving it off of the balance sheet and into the income statement, debit unearned revenue and credit grant revenue right in the special revenue fund. And then we're going to pay that invoice, and we're going to expense that invoice directly out of the special revenue fund. Now, could we have transferred this money to the general fund and paid it out of there just like we did with the last example in 2A? Yeah, we could have. But I chose in this example to pay it out of the SRF to avoid having a spike in supplies expenditure in the general fund that was unbudgeted. So a similar thought process went into how are we going to record this transaction as went into examples 2A and 2B. Where is the best place to show this expenditure so that we have comparability and consistency, and that we don't really misrepresent or skew our general fund one way or the other. I do want to make a quick note here to remind you that even though these funds have broad flexibility in what we can do with them, they're still federal funds. And they are, and we have not received any guidance to the contrary. At this point, they are all subject to uniform guidance. And that means in particular, in this example, what comes to mind is the procurement standards in uniform guidance. And I'm talking about 2 CFR part 200.317 to 327. I know that's a bit of an obscure reference, but if you were to, well, we can certainly add that in when we distribute these things, and you can Google it as well. Procurement standards for federal funds require recipients to have and use documented procurement procedures, so your purchasing policy. And a good rule of thumb is that your purchasing policy should be at least as restrictive as the federal procurement standards, so you never get into a situation where you might, by following your own rules, you're inadvertently breaking the federal rules. They're pretty loose, I shouldn't say loose, but the thresholds are pretty high at the federal level. So I think it's fairly safe to say that most of our purchasing policies are going to fall within those levels. I'm not going to talk too much more about uniform guidance at this point. If you have any specific questions, again, we're here you can put them in the Q&A, you can email us or call us directly, and we can help with those things. But just don't forget that these funds on their initial spend still have federal character and therefore have to abide by the federal rules, which for grants is uniform guidance. All right, Katie, next slide, please. Just a few other points from me in case there wasn't enough going on. The federal government has decided that effective yesterday, they are no longer using DUNS numbers. They have transitioned to a unique entity identifier as the authoritative identifier for all entities doing business with the Fed. This, I'm sure, was in the works well before yesterday. It's a little bit crazy that it fell right on the same month as the first ARPA reporting that's due, but that's life. So the good news is anyone with an active or even expired registration in SAM.gov has already been assigned a UEI, that unique entity identifier. And I would recommend that you go on to SAM.gov and make sure you make a note of that UEI sooner rather than later, just so that you have it while you are doing your reporting and updating your other documents as well. Anyone who's memorized your DUNS number, sorry about that. Time to commit a new number to memory. I just got a new credit card and I have to memorize the new number now. I mean, have to is loosely applied here, but that's the way these things go. Before I want to jump down to the last thing on this slide first, which is document everything you're doing with the ARPA funds. For those of you who worked with me, this is rich coming from me because I tend to just do it in a way that I think I'll remember how I did it in the future. But I do not recommend that. It was a terrible decision on my part. And I would recommend making sure you're making a note of what you're doing and why. And so that can be as simple as adding a memo to your journal entries before you post them, or typing up a separate memo, keeping spreadsheets along the way to track the multi-year performance period, and then save everything to an electronic ARPA file. I would recommend printing out any of those memos, journal entries, or spreadsheets to PDF and saving them right in that electronic ARPA file, and then you won't inadvertently change the Word document or the Excel spreadsheet along the way. And lastly, I want to reiterate something that Katie said earlier. Don't wait to start your reporting. It's not just as simple as logging in, selecting the standard allowance, saying we haven't done anything yet. There was a number of, you have to upload all those documents, you have to find them. Make this a priority early this month so you have an opportunity to get help if you need it. And on that note, I'm going to pass it back to you, Katie.
Great, thanks, Sarah. And I'm just going to end on a few basic slides that we cover all the time. I want to definitely call out VLCT's planning framework for your ARPA funds. Prioritize good governance, leverage your ARPA aid, and invest in best long-term uses for your recovery and your community. And if you can find the intersection of those three things, you will have success with your ARPA funds. Last reminder that we have the ARPA Assistance and Coordination Program. That's me. That's what I do all day, every day. We have Sarah that's now joining to help with the financial aspects of your ARPA award. So that's a huge win for us, and we're excited to work together with you to ensure your success We could not do this work without our 11 regional planning commissions throughout the state of Vermont. We work hand in glove with them. I think that there are many on the call here today. We meet on a regular basis. We talk about the issues that are being felt on the ground to come up with best solutions for you. So feel that you have a safety net in your RPCs and Vermont League of Cities and Towns. And thank you. Thank you for being with us today. Thank you for working with us throughout this and being partners in the good old ARPA journey. And if you need to contact Sarah or myself, our information is here. It's also on our website. And we look forward to working with you on the road ahead. I'm going to stop screen sharing and we can move on to question and answer, which I have the feeling is going to get busy.
Yeah, so I'm going to help with the question and answer, and I'll just remind everyone now to please ask your questions in the Q&A. You also have the ability to give questions a thumbs up. So before you write your question, just scan through and see if anyone else has already asked it and then give it a thumbs up. Or also scan through now and give things a thumbs up because we will ask the most popular questions first. That helps us to answer as many things that as many people want to know. One of the things that has come into the chat a few times already, so I'll just share here, is that we will be posting a recording of this along with the presentation slides, and we'll send that out to everyone afterwards. That's sort of our standard policy. If you look in our resource library, there's a recorded trainings tab, and anything we did for free you can find there. So now I see a bunch of questions have come in, and there are quite a few about revenue replacement. So I'll start with the first one that says, if you choose revenue replacement, can you still use it for water and sewer infrastructure?
Yes, I'll jump in and take that one. You can use it on any of the other eligible expenditure categories. So if you were to look at that table that was on one of the earlier slides of the 83 expenditure categories, you can use, if you use the revenue replacement approach, you can still spend on water, sewer, broadband, mental health services, vaccinations, any of those other categories. If you want to spend there, just do it under revenue replacement. You'll have less reporting, much easier reporting, and much less documentation that you'll need to provide for it. So yes, you can.
Thanks, Katie. Our next question is also about revenue replacement. And it says, what do we have to do to take the revenue replacement option by the 30th? Do we just need to indicate on the report? Is there a motion by the select board, or is there something else that folks need to do?
It will be in your reporting. So you will do a project and expenditure report. And if you were to follow through in the user guides, I first just want to call out that one of the downfalls of this is that us here at the League, we don't have access to the portal. So we can't actually see what you're seeing in the portal. So we're only relying on Treasury's webinars and user guides. And some of those screens might look different to you when you're navigating in the portal. So when you're doing the project and expenditure report, you will pick expenditure category 6.1. And there was a screen in one of my slides that was a screenshot of what you would actually see. And you'll enter your information there. That was a two-part question, correct?
Nope, I think you covered it. It was just, what do folks have to do to take that revenue replacement option? And your short answer was indicate on the report.
Was there a select board?
They asked, does there need to be a motion by the select board?
It would be a best practice to have that. It's always a best practice to have the motion. And really think of it this way. It's just how you're going to be reporting. That's mainly what you're doing, is reporting it under revenue replacement that gives you that broader flexibility in spending, but always good to have a motion on the record.
That makes a lot of sense. So our next question again is about revenue loss, and it says, do you have to report your total amount that you want for revenue loss by April 30th, meaning even the cash that isn't in hand yet?
I would say yes, but I'm thinking that there could be an audit component of that, Sarah. I think that you just claim your entire award as lost revenue in this April 30th reporting and you're done.
It does appear that way. So in the April 30th reporting, it asks you whether or not you're going to take the standard allowance. We recommend that you should say yes. And then it asks you to identify the amount of revenue loss. And at this point, it looks like that is your entire, like, are you going to take your entire award under revenue loss? We really think you should, because that really frees you up to do, whatever you want, not whatever you want.
Government
Reported, I
services.
should say. Government services, which is very broad, and it eases the reporting requirements. It does not appear in that report that they're asking how much revenue loss did you have this year, just how much overall are you going to take as revenue loss. And that's really a reporting requirement. And then you're going to talk about what you did during the reporting period in that text box, which I have no idea how Treasury is going to consolidate that data, having it in text, but it looks like that's where that text box comes in. And then for internal financial reporting purposes and for auditing purposes, that doesn't mean you've spent it and you've recognized it. That means you're telling Treasurer, we're going to do this with all of our award. And then internally, as you're spending it, you recognize the revenue. Did that answer the question that you were asking me to weigh in on?
If it didn't, follow up in the Q&A.
Thank you. So we're moving away for a short moment from that portion. And this question is, if you're giving money to an outside org, such as a fire district, a nonprofit, something like that, are you required to keep further records of how the funds were used?
I think I understand the nature of that question. You need to document, obviously, that you've spent the money to whom and for the purpose intended. But in terms of, for a while there was a question about subrecipient. Are they a subrecipient? And under Expenditure Category 6.1, they are not a subrecipient. They're a beneficiary. And it's as simple as writing them a check, putting in your explanation, funding nonprofit, local nonprofit, and the amount. And obviously, internally, for your own records, you're going to want to document who received the money, what was the reason that you were providing it for. And a lot of this stuff is, what does Treasury need? But then also, what do your voters need or your residents need? So if you had a resident walk into your town office and say, I want to know how all your ARPA funds were spent, you want to be able to have documentation so that you can demonstrate to those in your community how the funds were spent, and they can have confidence in the process.
Thank you. So we've got a few questions here that have a bunch of likes. So I'm going to ask one more about revenue replacement just for now. And the question is, do you still need to have public input if you take the revenue replacement option?
It's all the same as any other option. So while public engagement and public input is not a requirement of the funding, it is implicit throughout the wording of the final rule that you should conduct some form of public engagement. And so, as I mentioned earlier on in the slides, the select board, the city council, board of aldermen, whoever the legislative body is for your community, they're the ultimate arbiters of the funding. So we're seeing everything from regular warned items on a select board meeting agenda down to ARPA advisory committees being formed and everything in between in terms of how to engage your public and gather feedback. And so ultimately, it's the legislative body's decision on how to spend the funds. I hope that answered the question.
Thanks, Katie. And I'll just remind folks that if you have questions, make sure to ask them in the Q&A and not the chat. I've got a small screen here today, and I'm looking at a whole bunch of chats coming in. So it's a big help if questions are only in the Q&A. So my next question is, a nonprofit has asked us for money to upgrade their facility. They're located in another town, but their services are available to our citizens. If we grant their request, what is involved with reporting and oversight?
If they're providing services to your town, I think the question is, are they providing general services to your town? They're not contracted services on behalf of the municipality. That would be my first question. If it's just a nonprofit providing general services in their area of their mission, then you would want to document, again, same thing as any other nonprofit. how much money, who it's going to, what types of activities it might be funding. It might be general operating funding to assist during perhaps a revenue impact as a result of COVID. And what kind of services they do provide to your residents. You want to be able to document that. Is that a requirement of Treasury? It isn't at this point. There's no documentation required in the April 30th, 2022 reporting. We're obviously going to keep close watch on what will happen in this next period. So from April 1st spending, April 1st, 2022 through March 31st, 2023, we'll see what guidance comes out. As soon as we get it, we comb through it, and then we try and sort of sugar it down and pull out the salient points so that you don't have to read in the final rule 437 pages of information, that most of which isn't relevant if you take the standard allowance. But as of right now, and if you've spent that money, there's no documentation required on behalf of Treasury. It's just an explanation, a narrative in an explanation box, and that's what Sarah was referring to, saying, I don't know how Treasury is going to pull all this data out of all these little boxes and collate it, but we shall see. Mm-hmm.
So this question is a little bit different. It is asking about county and state. So it says, is it necessary to separate the county and state portions of ARPA, or can it be lumped into one ARPA sum? And then below it, there's a comment that says, when identifying revenue loss for reporting standard allowance, do we include both county and state?
So you didn't get any state ARPA money. You only got local ARPA money. And then you also got county money, because we don't have county style of government in the state of Vermont. All of the money that was allocated to counties was taken and reallocated to municipalities. So your local money and your county money is now all local money. So if you got $100,000 in local ARPA award and you got $300,000 in county money, your total local award is $400,000. So county money no longer exists. It's all local money.
Thank you. Okay. So we have a comment, and it says that they have spent about $10,000 in funds so far and will be taking the standard allowance. For the April 22 report, do we need to document the money already spent, or does claiming the standard allowance cover expenditures that have already been made?
Do you want to take it, Sarah?
I'd be happy to. So for your April 2022 report, you need to do two things. First is electing that standard allowance and letting Treasury know how much of your award up to the total amount, or $10 million, whichever is less, you're going to spend on revenue replacement. And you need to document how you've spent money to date in that text box, or not to date, but through the end of the reporting period, which was the end of March. And so if you've spent, what was it, $10,000 so far in your narrative, you would put in there, through the end of the reporting period, our entity has spent $10,000 on X, Y, and Z. And we encourage you to be as detailed as you can about what that was. And so you're going to do both of those things. You're going to take the standard allowance, tell them how much of your award you're going to take as revenue replacement, and tell them exactly what you've done with any money spent so far to date.
So Sarah, we have another question that is similar, but I'm not sure if the answer would be the same. And it says, if we have already spent some of our money, can we still claim all funds as lost revenue, or will we need to report the expended funds separately?
So that's pretty similar. So it's that two-part thing. Both, hey, yeah, we're going to take the standard allowance and we're going to use this much of our award toward lost revenue. And also, so far, we've spent this amount of money. Also, can I say, how much fun is this? I love this question and answer thing, although I'm very distracted as they come in. So yeah, so it's pretty much the same answer. It's a two-part process for the reporting period if you have already spent your money.
And while I kick that question to you, I dropped in the chat, it's the link to the state's allocation dashboard. It's on their website, and it's every single award by municipality. So if you want to know what Athens received, or Victory received, or Montpelier received, you can click that link and you will see, it will show the NEU money, it will show the county money, and the column on the far right will show the total award. And that total award is what your award is. for your town. Back to the county money thing.
So we've got a bunch more questions here, some with not as many thumbs up. So if people haven't had a chance recently, they've been listening. If you want to scroll through and give things a thumbs up, I'll still try to ask the ones that the most people need answered first. So take a minute and do that. And just to reiterate, we will be posting the slides and the recording afterwards. That was a question that had been uploaded a few times. So I just want to let you know that we will do that. Okay, so here is our next question. It says that you'd previously indicated that we aren't able to use our allocation for a new town garage. However, it seems like by using the revenue replacement standard allowance, we would now be able to use that allocation for the garage. Is that true?
True. Standard allowance.
Okay. That was a quick answer.
Right? We can try it. We can get through lots more if we do quick answers, right?
That's right. So how about this one? Using the standard allowance, can a municipality contribute funds to CUDs without running afoul of the Vermont law that municipal tax dollars cannot be used to fund CUDs?
Yes.
We're going to get through so many of this, right?
Because you're not raising taxes to make the payment. And it's still allowable use of funds, regardless.
Yeah. And you did answer this, but we just want extra special clarification. There is no requirement by Treasury for public input about spending the funds.
There is no requirement. It is a best practice. Mm-hmm.
Great.
Lisa, can I make a quick note? I did put, someone had asked for me to repeat the procurement standards on the uniform guidance, and I did put that in the chat for everybody and provide a link to a website that I recommend you bookmark if you want to read the uniform guidance when you can't sleep some night.
Because it'll get you back into REM stage pretty quick.
Very quickly.
Mm-hmm. Mm-hmm.
So this is a question, Katie, and I think that you may have already talked about it a little bit when you told folks that we can't actually see what they see in the portal. But I'll ask it, and it says, I had already uploaded the documents a few weeks ago. Yesterday, this person went into the portal to ensure that the roles had been assigned and everything was working. And what they say is they could not see the section in the portal to verify that the forms had been submitted, and they didn't see the annual report form. Are you able to help guide folks on using the portal, or is there anyone who can help with that?
I can help. I've been, I'm sure there's a few of you out there. I try and troubleshoot over the phone based on what I've read, what I know, and what I have access to for information. And some folks I'm able to talk through to success, and others I have to say you're going to have to email Treasury or call their number. And on our website, in the FAQ section, there are a couple of questions about Treasury. I don't see my whatever. What should I do? If you click it and open it in the portal, it's specific about the portal. I should have said that. The questions about the portal, what should I do? If you click it and open it, the contact information for Treasury is there, both the email address and the phone number. I'll find the link to the question and pop it in the chat. And I have heard that folks have better success, both in terms of getting their question resolved and in a timely manner if they call versus email. We can say from our own experience of sending emails to Treasury with questions, with really specific questions, the answers that we get back are not helpful at all. So it might be worth your while to just call them, especially if it's a portal issue.
Thank you. Let's see, our next question is, if we made a commitment to spend, and their example is to the Waitsfield Champlain Valley Telecom for a broadband project, is that considered spent? So if they made a commitment, is that considered spent?
No, but it is considered obligated. So if you recall, you have to obligate your funds prior to December 31st, 2024, but you don't have to have them all spent until December 31st, 2026. And so also depending on what that commitment looks like, was that just an email from the manager, or was that a resolution by the board? Was that a contract that you signed? I would say, a resolution by the board, a contract that you signed is going to definitely be an obligation of funds that says we are going to give you X dollars. That is not going to be spent. I would encourage you to make sure you have like a note of that somewhere in your financial system so that you don't double spend those funds. But those are not going to be spent for revenue recognition purposes yet. You could put in your treasury reporting, this is what we've done so far, though we haven't spent those funds, since they're looking just for a narrative explanation, but I would say those are obligated and not spent.
Thank you. So this is an interesting question that I haven't seen come up before. And it says, does the town have to report what the Department of Libraries has given to the town libraries?
Say that again?
Does the town have to report what the Department of Libraries, I'm assuming the State Department of Libraries, has given to the local town libraries?
No, so I'm going to guess, I'm sort of guessing into this question a bit, that their local library received ARPA funding through the state's Department of Libraries. So that is not that's not your local award. Consider that just another grant.
Yeah, but it is another federal grant.
It is another, and it contributes towards your, want to say it, Sarah?
Single audit threshold.
See, and you thought municipal finance couldn't be fun. It is totally fun.
Who thought municipal finance couldn't be fun?
I don't know, somebody.
I'm going to need a list of those people.
I might have thought that. I'll volunteer.
Lisa!
Yeah, so it's, you only have to report to Treasury on your local ARPA award. So let's say you did a water and sewer project and it's going to cost you $2 million. And you got $1.5 million in state ARPA money, and you used 500 of your own ARPA money. You're only reporting on the 500,000 of your own ARPA money. Although, from a single audit perspective, that state money with your 500,000, it gets subgranted to you. It goes towards your single audit. Yes? Yes.
Great, thank you. So we have a question here about an existing revolving loan fund. And I think that might be too specific to answer. Sarah indicated that. So what's the best way for folks to ask that if they have questions about it?
The part that I want to do a little bit more research on is charging them interest during repayments. I don't think I have the answer to that right offhand, but feel free to, we will reply directly to the person who asked the question. And I do believe that we normally put together we put together all the questions and answers and publish them. And if you have, again, really specific questions that you want to chat with us about, our contact information was on that last slide, and we would encourage you to reach out to us.
Thank you.
Oh, here's a good one. I'm sorry.
Go for it, Katie.
Do we include ARPA money on our subrecipient annual report to the state? Yes, you do. It's a federal award.
Fantastic. Do you know what the yearly reporting is going to look like going forward yet, or already?
All we know is this year's.
Yeah.
Yeah.
We have to assume that what you see this year is going to be what you'll see every year for the next till through 2027. And our assumption is that each year you'll go in and you will basically update your explanation field of how you've been spending your ARPA award.
Okay. That makes sense.
And if it changes, we will let you know.
Excellent. And can you reiterate or confirm for folks that what the final rule says is that April 30th is the one and only time they can take the standard allowance?
Yes.
Yes.
Okay.
In fact, I see our numbers dwindling. So I want to make sure anyone thinking about logging off might consider using this extra 30 minutes to log on and get started with their reporting.
I think they're all going right now to
do it now.
Yeah, they're bailing on us to go take the standard allowance. That's what I think. Do it.
Okay. How about another question? Does the money need to be spent locally? Can we give it to a nonprofit that does not have services in our town?
I don't see why not, but I would think that you'd want to spend it on something that provides benefits to your residents. I think that would be a very hard one to explain to residents if you contributed money to something that doesn't actually benefit your community. I need more info.
Makes sense. What if folks haven't spent any money yet? Is it still the same two-part reporting?
You have to still do your same reporting.
Yeah, say, yes, we're going to take the standard allowance, how much we're going to use for revenue replacement. And then in that text box, you would say, thanks for the money, we haven't spent anything yet. Or, so for this performance period, we have not yet expended or obligated
identified expenditures yet.
Okay. Scrolling through questions here. Are there any that you guys see, Katie and Sarah, that I haven't? Yeah.
I see one that's going to be really important. So the question is, using the standard allowance, can funds be used to pay down or pay off municipal loans? No. There are very few things that Treasury has identified as no-nos, and this is one of them. So you cannot directly pay any debt obligations. You cannot pay any settlements, and you cannot directly fund any pension funds. So no, steer clear of those few things.
Okay. There's lots of questions here. I'm sorry, folks, I'm a little bit scrolling a little bit.
I see one here. What, if anything, would make a municipality ineligible for the standard allowance?
Yeah.
Nothing. The standard allowance, it is beneficial to every town, city, and village. Of the 277 that accepted their ARPA award, all can benefit. Even Burlington, whose award is greater than 10 million, they may do their revenue loss calculation in Burlington's instance, and this is only in their instance. Their revenue loss might have been less than 10 million. I don't think it was, but it might have been. And if that's the case, then they would use the $10 million standard allowance. It's only if you are a larger city that had a revenue loss greater than $10 million that you wouldn't take the standard allowance. So there's nothing that would make you ineligible.
And I think there were a couple questions, or maybe my screen just moved, but it asked, what's the threshold for triggering a single audit?
$750,000 of federal dollars expended, not received.
In your fiscal year.
Correct.
Yep.
Mm-hmm.
And so you could have gotten an ARPA award for $250,000. You could have gotten a Fed Highway award for $250,000, and you could have gotten another federal award for $250,000. And if you spent all of that federal money in a single year, you'd have to have it automatically triggers a single audit.
Okay. Let's see, looking at the end and keeping good records for auditing purposes, would it be best to set up the special revenue fund expenditures based on use of funds / each project?
Sarah, you want that one, or do you want? Oh, you're muted.
I'm not, I was just whispering. I was reading the question to myself. Looking at the end, keep it good. I think it really depends. It depends on how many different projects you're going to run through that special revenue fund. I think that, the general rule of thumb for setting up accounts in any fund is to have as many accounts as you need to have reasonable, usable financial reporting without having too many, which I know is super specific, right? So like somewhere between 0 and 1 million, but really, so it depends on what you want to do with those things. So I'd be happy to, I think the question just went into the answered column, but if that person wants to email or call me, I'd be happy to chat about what you had in mind, and we can brainstorm different ways to structure your special revenue fund.
Thank you.
Here's a good one, or I mean, they're all excellent questions.
Yeah.
But so the question is, so is an essential message that after April 1st, as provision of government services can be just about anything if that's elected, but if the expense was March 31st or before, it must conform to the other expense categories, e.g. no retroactivity. And I would say, I just want to paraphrase this. The answer to the question is no. So the final rule goes into effect, was it April 1st, Katie?
Yeah.
There is no penalty for early implementation of the final rule. Is that
Yeah.
true? So you can, so go ahead, Katie. I want you to,
No,
you
no,
can
no,
answer that, but
I don't want to trip on you, and you trip on me. But as long as the expenditure occurred after March 3rd, 2021, you can reclassify that and spend it under, report it under the expenditure category 6.1. So even though the final rule took effect April 1st, there is no penalty for following it before. In fact, I want to say there's an FAQ maybe in that, in the new guidance that came out, or they could have said it in their webinar, where it's fine. You can use expenditure category 6.1 as long as the expenditure has to take place after March 3rd, 2021. That's the caveat.
So I think these are both a good question to ask now. And two people asked the question, Anne and Brian, and they asked it differently, but I think it's essentially the same thing. And it's, if we take the standard allowance and use the ARPA money now, can they then use freed up general funds to do other things? And then what does that do to reporting?
That's the elephant in the room.
this is the $1 million question, or should
Yeah.
I say the $10 million question?
Exactly. It is the $10 million.
Yes, asterisk. So you may use your ARPA award for the provision of government services, which, if you're thinking through the journal entries or the flow of funds for that, would create a surplus, could create a surplus in your general fund. So if you bring in your ARPA money, you say, look, we're just going to offset costs of services this year, run it through the general fund, you are going to have revenues in excess of expenditures, which equals a surplus. All else being equal, that's going to fall to the bottom line as an increase in unassigned fund balance. Because what you've done is you've removed the federal character from those ARPA awards, and now you have unrestricted dollars that have increased your fund balance. What happens next is a big old, it depends. It depends.
Like all capital letters.
Yeah.
Mm-hmm.
It depends on the practices and the policies in your organization. For example, if you're a government that has a established policy on fund balance that says something like, the select board will assign any fund balance over 15% of next year's budget for purposes that it sees necessary or sees fit to assign it for, or if that then runs back through next year's budget. There are a number of different mechanisms in place to deal with that, and it is going to vary greatly from municipality to municipality. If you have a specific question, or if you want to talk specifically about what that looks like for your town, feel free to give us a call. This also might be a question for your auditor or your lawyer as well. We can give you we can talk through, what have you done in the past and how might that look with a larger sum of money? Because inevitably, or I hope so, eventually we're all going to experience some sort of surplus. It's just the way it is. You have vacancy savings. Let's say you have a large police department, you have a few vacancies, boom, you have a surplus, because what you've done is your expenditures are less than budget. We're, a non-exchange transaction world, so we raise the taxes that we bill, and so we have revenues that are close to budget and we have expenditures that are under budget. We have a surplus. So there's likely a process in place or a past practice in your municipality to how to deal with that surplus, but now we're really talking about larger dollars. So the point really is, it depends. Great question.
One we've wrestled with for months.
A lot, yes.
For months, but even more so now with the final rule, because essentially your whole award could become general fund, depending upon how it works its way through your general ledger. And so how you treat that, I will say more to come. As we learn more, there'll be more to come. The reason we didn't go deep into that particular issue, although we would have liked to, is because we're really trying to send the message that this is just your reporting right now. So focus on your April 30th reporting, elect the standard allowance, go into the portal and get all of that done, box checked, cross it off your list, move on. How it's going to run through your general fund, look for a follow-up webinar to come from us as we learn more. This is federal funding for anybody who's used federal funding before. This is unlike any other federal funding source you have ever used. It is federal funding turned on its head. That's why I say you never get your money first. You never get this much money with limited to no restriction. So we just got the final rule, 437 pages of documentation that guides this funding. More to come. It's being interpreted. CPAs are weighing in. Everybody's weighing in. And, as I said, we've consulted with industry partners, CPAs, other folks who do financial work. And everyone is like, wow, this is like, that's a good question. That's a good question. So we're waiting on answers to all of those good questions. And as we get them and have firm confidence in them, we will certainly pass it along.
Thank you. And do we want to I can keep reading questions. Did you guys see any other ones that you want to answer right now? What's our best step? There's a whole bunch left in there. So
I do see a question about if you already have what'd you say, Katie?
I just want to be sensitive to people's time.
Oh, okay.
Yep, we're at 1:43 and we were scheduled until 2.
Okay.
Okay.
I want to quickly answer this. If I have an ID.me account, is it still recommended to create a login.gov account?
If you have an ID.me account and you can access the portal and do everything that you need to do through that ID.me account, use it. That was the guidance early on. You'll notice Treasury came out and said, oh, you'll need an ID.me account. And then a few weeks later, that whole thing disappeared. The ID.me account, it's like, where did that go? I think that there were so many problems. You have to produce some personal verification documentation, which seemed pretty invasive to a lot of folks. And so they walked it back to the login.gov, which is you provide, it's an easy threshold to cross. The hardest part of it is your multi-factor authentication to, it sends you a code either through email or by text that you enter in and it confirms it's you versus you having to supply your birth certificate or other information like that. So login, definitely the lower bar. And if you haven't established an account of anything, login.gov is the way to go.
I have another one here. Hi, Shirley. I know I can't see you. Won't expenditures in your utilities require a transfer to the utility for financial statement reporting? The answer to that is yes. So your utility funds are enterprise funds. The nice thing about the special revenue fund and the general fund and getting to choose where you want to expense those specific items is that they're all governmental funds. And so they all roll up together in the government-wide financial statements. But if you're going to do something with those funds in your utility, then yes, you need to transfer those monies out of your special revenue fund into that utility fund if you choose to use the special revenue fund as a launch pad for ARPA. Thank you for the question. I have another GAAP and GASB question that I'm itching to answer. So based on GAAP and GASB, expenses incurred as of the reporting date would mean goods or services received as of that date, yes. And so under modified accrual and accrual accounting, an expense is incurred when the goods have been received or the services rendered. And so that's sort of the same threshold you're going to use at the end of the year when you decide, which period did we actually buy this new truck in? And it's, when were the services rendered or when were the goods received? And if it's on or before the end of the reporting period, then those expenditures, those monies have been spent. Like we said before, if you wanted to put in your portal, we haven't spent anything yet, but this is what's coming up. I'm sure that would be fine as well. They may be obligated already, but they've not been spent. Those expenditures have not been incurred until the goods are received or the services have been rendered under modified accrual or accrual-based accounting. Again, that's going to be different for cash-based accounting.
There's one here. Sorry, Lisa, we're not making your job.
No, you guys are helping a lot. When folks upvote questions, then I know that they're great ones to ask because lots of people have them. When there's only a couple likes, then I'm not quite as sure because I am not a content knowledge expert like you guys.
So how do you know if the portal has been set up already, or do we assume it has not been? If, oh, you'd like to answer that question? It's funny, I can see you moving in there. Yeah.
No, I didn't mean to.
Okay. If you are the authorized representative, when you certified to accept your funding last summer, if you were named as the authorized representative, if you have not gone into Treasury's portal, if you have not created a login.gov account and you have not entered the portal, it's not set up. So the portal last summer, everybody's portal happy now. I don't know if you realize this, but everybody seems to have a portal. So last summer, portal number one was the state of Vermont had a certification portal. So if you wanted to accept your ARPA funding, you went online last summer, you filled out like 21 or 22 questions, a lot of which was contact information, and said, yep, we want our funding. Box checked. Yep, do you have these documents signed? Check, check, check. Done, submit. All that did was tell the state to tell Treasury, yep, we want our money. So the state of Vermont took all of that information that was entered into their certification portal, and they sent that along to Treasury that they then uploaded into their reporting portal. So whatever information you furnished to Treasury then is what they're using now. So if you submitted only one person, not two, Treasury only has that one person as the primary point of contact, which is the authorized representative, which is actually different than the authorized representative in Treasury's portal. Talk about confusing. So whoever that person was when you certified authorized representative, they are the account administrator in the portal. So if no one from your town has gone into the portal to set it up, you're not set up. Last summer doesn't count. That's not the portal. That's portal number one. We're doing portal number two now.
There's a question here that also related to the portal, Katie. It says, if you want to change your authorized representative, how do you do that? Who do you contact?
So it depends. If your authorized representative has already gained access to the portal, they can go in and change everybody. They can remove themselves and put somebody else in that person, or they can designate more than one person for each role. If your authorized representative / account administrator, let's say it was the former chair of the select board and they didn't run again in March and they're gone now, you don't have, that person doesn't have access. So you don't have anybody as your account administrator anymore because the person's gone. Call Treasury and explain that to them. And they'll do it on the phone. You can email them, but I highly recommend you call.
I have one here. So claiming revenue loss allows for the ARPA money to be used with other federal grant money on a project, that question mark. And that is, yes, you can use ARPA money to match other federal grants, which up to this point I thought was completely unheard of. I'm not sure, it's not about claiming the standard allowance, but reporting under category 6. Revenue replacement that has a subcategory 6.2 now, which is specific for using ARPA money to match other federal grants. Anything to add on that, Katie?
No, you can use it for as your non-Fed share for federal grants. You can use it to match state grants. As long as you're taking the standard allowance, then you can use it. You're sitting on a big old pile of grant match. And I saw Nick had a question about an equipment grant that was up there. I don't know if I can quickly here. It requires 25% match from the municipality. Yes, you can use your ARPA funds for that. That grant match is historically a big impediment for small towns in terms of chasing grants. If you're able to get a $100,000 grant and you need to supply 25% grant match, where are you coming up with that 25 grand, right? Or whatever the amount is, based on the match requirements. So now you actually are sitting on a lot of potential grant match. And so if you are ever contemplating doing a project and using other funds to do it, there's a lot of federal money flowing through the state of Vermont right now for a lot of different purposes. I saw there was a reference to the Infrastructure Investment and Jobs Act, also known as the Bipartisan Infrastructure Law. Sorry, I had to get the L. Yeah, I was going to say bill, but it's actually BIL. Bipartisan infrastructure law is the same thing as the Infrastructure Investment and Jobs Act. And the state of Vermont both gets formula grants where they'll automatically get a percentage of the funding that will flow through the various state agencies. They are the Agency of Transportation, Department of Public Service, and Agency of Natural Resources. And then there'll also be competitive grants that the state of Vermont itself will chase to draw down more funds to bring to the state of Vermont. And they're working through all that program language right now. But your ARPA funding for any of those programs that come down that are municipalities or eligible applicants, your ARPA funds could be the match for that. And I'm going to guess that that was a big reason why that they changed the whole grant match thing in the final rule, because it will allow communities to leverage additional federal funds. So if you are ever thinking of doing a project, an infrastructure project, now's the time. And I cringe to even say this, and maybe Sarah can back me up. But if you have a big project that you have to do, now is even the time to take debt if that's going to be a component of your project. And in many of the large, expensive projects, you have to take on debt to do that. And debt is pretty attractive, comparatively speaking, right now in terms of the terms. The interest rates are good, are decent. And they're probably starting to climb. So if there was ever a time to consider doing that, now's the time, because you'll minimize the amount of debt that you'll have to bring into a project. And it's more than just federal funds. There's a bill running through the State House right now. It's H518. And it is loosely, it's around fuel switching for municipal buildings, but it's really, think of it as a weatherization funding for municipal buildings that towns would be able to apply for funding. I think it will get funded with about $40 million if it crosses the finish line. And so if you have a town office that you want to switch your fuel system to renewable energy and you want to do a weatherization and you need to do a rehab, funding available. There's like never really funding for municipal buildings to do rehab. So if there was ever a time for you to think about using grants, now's it. Sorry, that's my pitch.
Thanks, Katie. And one part of the question about the bipartisan infrastructure bill was about when they can expect the funds to be released. And do we have any ideas about that?
Not yet. Mm-mm.
Okay. So we've got another question here that says, can the funds be used to make a purchase that was not originally budgeted for?
Is that it depends?
I don't know. It says, for example, buying a new dump truck or fixing a section of road.
How would you answer that one?
I would say it depends. Give me a call.
Yeah.
There we go.
I mean, so let me just play a little devil's advocate. If my ARPA funds pay for it in full, right? I don't have to offset it with any taxpayer money. If my dump truck is $75,000 and I have a $100,000 ARPA award, it depends. Oh, it depends. Yes, it does depend. Mm-hmm. I love that smile, Sarah. Come on, Katie, don't ask me that.
So I think this might be a good question to end on. And it says, what happens if our town does not report by April 30th?
I think that's actually covered in the FAQ, and I will make that an FAQ on our website. How's that? I'm going to leave that as a teaser for whoever asked. I'm going to go put it on our FAQ page on our website right now, so it'll force you to go look on our FAQ page.
Perfect.
I think the language might be just, I won't make it that difficult on people. I think the language is, it is not, is not looked favorably. Interpret that as you may. Mhm.
I understand. I'm in communications. I know meeting deadlines is important, right?
Mhm, mhm.
Is there anything else that you guys want to answer live? We have about 4 minutes left.
This is a good question. Is the SAM portal a treasury portal? SAM.gov is a whole different portal. So you need to register at SAM.gov to receive any federal funding. So that it isn't an ARPA thing. If your town has ever taken any federal funding, the requirement of that funding is that you have an active registration with SAM.gov, period. So in like almost every federal grant agreement, I think, that I have ever seen. And this one is no different. It's one of the terms and conditions in your grant agreement for ARPA. And so you need to have an active SAM registration technically before you start spending money. However, I will say, and Sarah, I think we talked about this, and I think it's in my FAQ, that you don't have to have an active registration to do the reporting. So if you look and see that your registration is not active, you can still report by April 30th, but it is strongly recommended that you make sure that your registration is active as soon as you can get it active.
Fantastic. I think that closes us out. Katie, are you?
Yeah.
Yeah.
And we'll have all your questions that we didn't get to, and we'll get to them after the fact in post.
Yep. And I will send everyone an email once the recording is live and the questions are answered. We'll send you the link for where you folks can find all of that.
Recording, slide deck, and questions, right?
Yep. Perfect.
Yeah.
Thank you all.
Thanks, everybody.
Thank you.
Go get started on your report.
Do it now.
Do it now.
See ya.